Right now, I see the rare earth space as being largely a geopolitical capex story. Greenland is sitting on one of the largest deposits of heavy rare earths.
So welcome to Bloomberg Intelligence and Market Insights. Today, I'm with Jack Baxter, who is a Bloomberg Intelligence analyst for global metal and mining. And you can find his research on the terminal on the B metal. And today we're going to talk about rare earths and the financial markets. So rare earths, it used to be a niche input. It all changed with a tariff war. And we learned that it's actually tied up to the energy transition business with electric motors. So it does bring a huge pressure, a huge hit when it comes down to geopolitics. It's not just about the extraction. It's also about the processing. And we learned that China is doing most of the processing, I think more than 90%. So there is a huge concentration risk for the global supply since everything seems to be made in China. If I use ETF Go, the functionality where you can see the ETF on Bloomberg, and you screen for mining, you will see that the third best performing ETF when it comes down to inflows is actually a rare earth ETF. So my first question to you, maybe it's no longer a supply story, but a capital market team. What do you think about that?
Look, it's definitely both. China right now has a near monopoly in the production of the high value rare earths. And the world's cluing on that we can't have this. We can't have such concentrated supply chains if we also want to pursue aggressive decarbonization and industrial growth. Outside of China, very little supply, if much at all. The world, excluding China, can only fill about 25% of their rare earth needs. We do see that changing because governments now have stepped in and they've shown conviction and they're putting their money where their mouth is and investing directly in these rare earth mines to try and shift the balance of power out of China.
So the US have been saying they wanted to create a strategic stockpiles of rare earths. Do you think that's actually even possible when you look at the overall demand and how much is being produced every year to build up a strategic stockpile?
Sure, I think we'll start off. So with that critical material, so I think the wording is very important there. So it's a critical material stockpile worth close to $12 billion US. Rare earths are a component of that, so it's probably not making up the entire value there. But yes, I mean, our outlook in the rare earth space is any marginal buying of this material has a squeeze impact on the commodity. Right now, we already know that there is a squeeze for, marginal buyers in Japan and military applications. We're already seeing that in spot prices. And then you add on top of that critical material stockpiling. So that's pulling more material off the available market. Again, it's more of a squeeze. Is it possible? Absolutely. Anything is possible. Will it come with a cost? I think so.
And do you think that's realistic to think that we could extract rare materials from, let's say, Greenland?
Look, Greenland it's an important asset. And so Greenland is sitting on one of the largest deposits of heavy rare earths, which is, it's a smaller market, but an important market nonetheless. And Greenland is sitting on a significant deposit of rare earths. And there is one kind of the Tanbreeze project is one rare earth project that comes to mind. And they are at advanced stages, in trying to get a final investment decision to get that mine off the ground.
If we reflect at the overall picture that we have here, do you think rare earth is a commodities story, maybe a FX story, or capital investment story?
Right now, I see the rare earth space as being largely a geopolitical capex story, where there is a lot of investment happening in this space. It's a volatile market around the news flow. So we're still seeing that news and investor interest is really driving the space. If we look forward, it's a newer market. And I think that's reflected in a lot of the interest in the space now. And we're yet to see the industry mature, I would say. For example, we saw an announcement just recently of the commencement of futures trading for this commodity. That is something that's quite common in other materials, but not rare earths. But that's going to change.
Coming on this market, do you see new player coming on this market, or is it going to be the Rio Tinto or the Glencore of this world because of the capex need?
There's a lot of opportunity in the rare earth space. Right now, there's a lot of projects, and they're held by companies that don't necessarily have a large market cap. So if the question is one of, do we expect consolidation in the space? Absolutely.
When you think about creating an extraction and maybe, like a capacity so there is a digging and also the extraction process, how much time and money does it take to actually create one?
Look, it takes a long time. There is an extremely long lead time. If you just start with the mine, so if you start all the way upstream, you start with a mine. Typically with a mine, you might see a lead time of anywhere from 10 years. So that's 10 years from just getting the mineral out of the ground. Let's stack on an extra 5 years to then build the separation capacity to get those finished products that you actually need. And that's using up-to-date benchmarks. So Lynas Rare Earths, an Australian miner, they've just recently completed a separation development in Malaysia. And you have its smaller peer, Iluka Resources, traditionally a mineral sands business, making a pivot into the rare earth space based on the resource that they already have. And that's taken around about that 5-year mark to get up off the ground as well.
And when I was looking at the name earlier this morning, and so neodyme, praseodyme, but is there some that are more important than the others?
Come on, where were you in your chemistry class? Those names should be, rattled off the top of your head. So the highest value concentration, or the rare earths, are mostly concentrated in the neodymium, praseodymium, which, if you don't know how to pronounce that, fine, just pronounce it NdPr. That accounts for the absolute large majority of the market share for rare earths. In 2025, it's not a large market. In 2025, we estimate that market size was probably only $6 billion thereabouts. Obviously, this year, with the way spot prices have gone, that market value is going to rise substantially. Could more than double.
So, if tomorrow there is a restriction on export for rare earth materials, what's going to be impacted the most and the fastest?
So, the most and the fastest would be the highest market value item, in my opinion, which would be NdPr. And we've already, to answer your question, we're already seeing an impact, and you've seen it historically. In January, China moved to formalize export bans on NdPr, particularly for military end-use items. And if you have a look at spot prices already, they have reacted. Now, if you look at what's happened historically, and history as our benchmarking guide, earlier in 2010, you had a very similar case of export quota restrictions. And we saw spot markets back in 2010 reach a high of just under $200 a kilo. And then later in 2020, so that was a supply side hit earlier in 2010. And then later in 2020, we saw more of a demand push where, the commencement of, wars in the EMEA region, as well as just a general push for decarbonization momentum, that also caused a spike in rare earth prices. So if you look at where we are now, so spot price for NdPr, it's more than just about doubled to about $120 a kilo. But again, if history is a guide, we could see much higher spot prices as that commodity is squeezed.
Do you think that the price could be high enough that it actually creates some inflationary pressure on the end products, maybe your car, your dishwasher, or things like that?
Absolutely. Ultimately, someone has to pay, and if it's not the producer wearing the margin, it's typically the consumer paying for that margin. And again, I think that probably more likely for a cost pass through to the consumer.
Well, thank you so much. It was great to have you. Once again, your research is available on the BIB Metal.
BIB Met.
Thank you so much.
Thank you, Hugo.